Alright, hello everyone, so let's take a look at Thursday. Now on Wednesday, okay, first of all, let's take a look, let's wrap up the week. So we had Monday, Tuesday, trade day, right? So I actually went long on Monday and it didn't work out too well. So, okay, Tuesday did nothing. Wednesday I said I'm going to sit on my hands, do nothing, okay? So that's all good. Market makes an impulse wave, comes back into Asia. If you used your Fibonacci trick, either from here, right, or from the low it did on Tuesday, which is here, right, you'll see that that 50% worked out. Okay, so now what? Well, this is why it doesn't matter if you make a mistake with your Fibonacci. All right, why? Because if it matches a Fibonacci plus we've got time, you go in. All right, you just go in, and that would have gotten you something in Asia, which is fine. Right, but what do we want to do with gold? Let me get rid of that. So ideally we'd like to go up with gold. So having a Tuesday there, market turning around, Wednesday closing higher is a good sign. So if the market does dip down, let's say it came back into this zone, I've just done a green rectangle here. I had a green rectangle yesterday in this zone, the day before yesterday actually. Remember, so if the market does come back down, okay, and this is your volatility on Wednesday, all right, bang. Also, if you boxed your trade on Wednesday, look at the box, okay, so you would have just done this bar, because these are the hours, right? See, the hours are going, and once it's after the hours, you got the news coming out. All you have to do is just box the high and the low of this 15-minute zone, and then boom it, you know, because I did say expect volatility, and that was going to happen. And this is 10 past, this is what, 5:45. What did we have? We had, I think, 5:45 to 10 past 6, okay, in the time period, right? So this is Thursday, right? Yeah, 5:50. Wednesday, 6:15, sorry. 5:50 is today. Yesterday, what did I say? 2:25 to 2:50. This was your setup, okay? We had news coming out. 3:40, if the market finds direction, first target is 6:15, then it's tricky. Be careful. There could be push moves to 10 o'clock, right? So, market pushes into 6:15. 6:15, guys, is there. That's just 6 o'clock. That's just 6:15. So if you pushed into 6:15, you should have said, okay, this is tricky. Let's just get out, or move the stop forward, obviously, right? And then the market retraces. So let's take a look at Thursday. This is Thursday now. On Thursday, all right, we've got these hours, right? So this is a bit crowded, as you can see, okay? So here I've got also expect news disruption. Check the news, right? I didn't check the news. Why do I know it could be a news disruption? Because of what I do, let's say, all right? So check it out, all right? And these are the hours, right? So if the market, this is also, look, pullback. So market pulls in, we have an A. Okay, so we're an A, B, C kind of a pullback. The market pulls back. There's a slight gap here. You should take a note, or just draw your line there, or extend your line into here. And then obviously you're going to tell me, but isn't this too big? It's not too big if you use timing. All right, just put your Fibonacci in there as well. Okay, so now, as you can see, you've got 37.5 here in the green zone, okay, and there, all right, which is your 25% zone. If the market dips down, closes gaps, and it's a trading hour, you know, okay, where to put your stop loss and where to get in. Then you can measure your risk way before you get in, all right? So you can do all these measurements beforehand. So it's not a big distance because we have time on our hands. If we didn't know the time, then you're right, okay? Then you could just say, oh, you know what, they bought here in Asia, and New York stopped it here, so I'll just go long here. And if the market comes back down into retracement to close gap, you're going to be in panic mode. All right, so we don't want to trade in panic mode. We want to trade with a bit of foresight. So let's wait for the trading hours. If we're down here, watch out for some volatility and then see how things pan out. And if the market goes in our favor to the upside after that swing day, trade swing day, Monday, Tuesday, then we can follow it into Friday. Where do you want to follow it into? Follow it into this bar. Okay, which the market actually did yesterday, right? See how the market did this nicely, close that little gap there. Okay, small little gap in any case. Okay, we could also say, oh well, you know, it pretty much did close the gap. Okay, which is fine, not a problem. But if the market goes back in there, tests the high, you still have a trade on your hand. If the market doesn't come back and it still keeps going to the upside, and you say to yourself, should I sell? Then maybe you wait for Friday, because gold's got Thursday and Friday. So if we go up into Thursday, Friday there'll be a retracement or something. So from the highs at the trade hour, you can sell, and that'd be less risky, wouldn't it? Let's get into euro dollar. Now with the euro dollar, same kind of setup. We've got Thursday, Friday trade day. Okay, as you can see, I've got a trade here. Now that's the impulse. Okay, so the market is clearly going down. All right, and that's a fast rush, which is fine. And a fast rush should also have some kind of a follow-up. You see, a boom and then a bit of an up move, come back down, kind of like following through. Okay. So if we have that situation here, then we should have some kind of a up move, impulse, like an A, B, C. And because it's a trade day, I did take a trade in there. Why did I take this and not gold? Because you see how the market pulled back into here. All right. Market pulls back. Let me just show that to you. So it made sense because it was cheaper. Okay, gold had already gone up, so if I was to enter there, it was just going to be a bit messy, because it was just too far out. Okay, this is why waiting for the retracement is a good idea. So as you can see, there are no real gaps here. Okay, maybe just a small one over here, but overall, okay, the market went up and then came back down to where it stopped in New York. It was a trade hour. Okay, so it's okay. Now because I'm at the summer house, I'm going to be up and running around, okay, going down the coastline today. So I've left the stop loss below the low of yesterday, okay, and I've got a cover zone and a profit zone. So it's like a swing trade and not an intraday trade. All right, but that's like the logic. If you wanted to, what you can do is take the stop loss all the way there, because that's your trade hour. And if you're wrong, okay, if you're wrong, you don't want to get stopped out, and that's fine too. Okay, but I'm not going to be watching this all day. So instead, I reduce lot size, extend the stop, so you know, it's like a swing trade, because I'm going to be following it all the way into Friday evening as well, depending on where what the market is doing. So that way we can take some profit, and that's 1-to-1 here, and then the upper one is at 115, and that's going to be like 1-to-5. All right, so 1-to-1 and 1-to-5, and we'll see how things go. All right, but that made more sense to me, because the market came back down after that impulse, and you can see it did the 25 at a trade hour. Okay, so now I'm thinking, okay, it's a trade hour and a market retracement, so let's do it. And that was the time, and that's the entry. Okay, so I hope that makes sense. So I think following that through is the way to go. Obviously, make sure your risk management is in order, and that's how I would play it. Obviously, I did say be careful for this zone, all right? we've tapped into it. Now we're going to see how things pan out. Okay, so there are some gaps at the daily and the weekly. So if the market goes up to close it, that's where the second target is. Then we'll see how things pan out. All right, so I'm just going to put that back on the daily or the 15-minute chart. We'll see where we go. The second one, let's see what's after that. Bitcoin. Now with Bitcoin, we've got Friday. Okay, and yesterday I said, guys, we have to break out one way or another. Now you can see here it didn't break out. It did a stop sweep. Okay, let's see the hours. Okay, look, this is Wednesday morning. Market doing a stop sweep. And if I take a look at Wednesday here, right, that's the 255 to 315. And then we've got the news. Look, before the news is 225, 250, and then after the news is 340. I think if they announced that 330. So 225 to 250 my time obviously is your box time. Okay, so 220, this is 340. Okay, 340 there, I'm sorry, just there, that's 345. Okay, so this is your pre-trade, that's your 340. And this is like your, I know this is a bit tricky because the bars are really tight. So what would you do? Maybe take this support and that resistance there and box this in. All right, and that's your trade hour. Now what do you want to observe here? Obviously before the news you want to say, where's the gap? There's the gap. All right, so market comes in, fills in the gap, starts to break out. That bar is a breakout. This is your entry bar. You just go in, okay, and it closes gap beautifully and goes all the way into, it should go into 10 past 6, right? 5:45. That's your 6 o'clock. That's your 6:15. All right, so we're up there into 6:15, right? Then it's tricky, be careful. So obviously then it's tricky, be careful. This is your 6:15, tricky, be careful. Okay, so there you go. All right, so and that's looks like that 60,000. Did I put that target in there? Yeah, because I put that line in there. Okay, so now what do we have? Well, we've got a breakout potential. Okay, why? Because it hasn't closed above that level. On the 15-minute chart, okay, you can see it's bullish. Okay, now what can you do? If the market comes back down and you want to go up again, it's doable. All right, it's doable. Other than that, don't do it. It hasn't really closed above this zone. Let's make that a little sharper there. Okay, it hasn't closed above, so we just have to sit tight. If the market comes back into Friday and you want to go long, then do it. Okay, because then it's going to be like Friday, we're in here, we're low, and we're going to go. If the market is mucking around here at the tops, then the market could equally sell off. That's an impulse down. So market wanting to sell is also on the card. So you need to be careful if you're going to trade it on the trade day Friday, because it could be from the top or from the bottom. But because you know the trading hours for Friday already, you could just set yourself up. If you took timing from me, you know what hours to look out for. All right, Friday, let me give you a heads up. I'll tell you what hours you need to look out for. Asia is going to be a bit actiony, so Asia will have some pushy moves. All right, ideally from 10:30 to 11:50. Okay, that's one zone. That's like a good zone if you want to get in. And another one in the US is a good zone, is 5:30. Right, 5:30, and then afterwards you can expect some sudden moves pushing into 8:30. So if you wanted to trade that period, for example, okay, then you know you could trade that, and you know keep an eye out for that, and that'll be okay. All right. So knowing the hours is, you know, obviously going to help us out here a lot. Okay. So this is like yesterday, and Thursday. Let's see when that happened. Yeah, 3:30. Okay, so 2:55 to 3:15. Okay, 2:55 to 3:15. 3:15 is there. All right. You see that time is close to that support. Okay, so the market is using it. There's a slight gap here, but I don't think they, you know, it's minute. Okay. I don't want to say they won't come to close it, because we don't really care what they're going to do. Because if they come to a trading hour, and you want to go along with it, you can go along with it. Okay. But like I said, it's a trade day Friday, so be mindful. All right. Also, I want to say, let's move on to SP500 on the charts. I'd like to say, I put the PDFs in the members area for PDF reports, right? I'm going to give you brand new ones on Friday, because there was a bug in the visual graphics on the report, right? The columns were not aligned with some of the signals there. So I'm going to give you corrected ones, and we should be okay. Bugs will always come up, okay? But, you know, we're fixing them. I'm fixing them. And because I'm fixing them, it's always one-man show. It's a little difficult and time-consuming. Now then, we've got Friday. This is an impulse wave. This is strong, okay? A lot of people are saying, you know, we're going into a bear market. Market will eventually come down here, okay? But we don't know. In the interim, it's an uptrend continuation, okay? And we have a pennant here. So that's the impulse wave with a pennant. So two things can happen on a Friday. We can close gap today. Friday we can pick up and shoot off, which would be ideal. Okay, or we can muck around here, and Friday can be a comeback day here, close gap here, and then have a potential to go further down. That's also doable. All right. And that's it. Other than that, we don't know. So we can play it out that way. You're either going to wait for Friday, okay? So we're going to muck around, or Thursday it's going to come back, close gap, pull back up, break out, or muck around, turn around, okay? And that's how we can play that through, I think. Just be mindful for that gap, because whichever way it wants to go, right? If it goes up first, then Friday, you know, it will want to come down to close gap, even if it wants to go back up. So that's a possibility, right? So if you're going to sell on a Friday because it's high, yeah, it's doable. It's not that it's not doable, but you know, we're against the move. But if you're going to do it, just make sure you cover your butts here in that gap zone, right? Let's take a look at Dow Jones. Now with the Dow Jones, I said let's not muck around with it. Yeah, let's not muck around with it. Okay, let's just not muck around with it. So leave it alone. I don't do indices anyway, but if I was trading Dow Jones, okay, because I'm only focusing on gold mostly, and if you know I don't have a position on gold like today, and euro dollar looks good, I'll go into euro dollar. Right? Okay, so this is NASDAQ. So that's the zone, and that's the sell-off. Let's take a look. So yesterday's hours as well. Let's see what happened. 3:20. So that was like in the morning, right? 2:55, 3:15. Then we have that news. 2:25, 2:50, 3:15. So that's the news, and that's, as you can see, 3:15, right? That's the market selling off, nice and easy. Then we got what, 2:15. Where are you? 2:15 to 2:30. There's your setup. Market rushing down. This is like a better trade, looks like, yeah. Why? Because you got the gaps here. You can see they're going to come and close it off, they come and close off 340, beautiful sell-off, into 430, and then I've got 640, beautiful 640, nice rundown. All right, a bit volatile. You see, this is why like indices are a little tricky, but you see the timing works. Okay, so it's just a matter of, you know, focusing. 615. Then it's tricky. Be careful. There could be a push move to 10 o'clock, and this is, I guess, your 10 o'clock. All right, and then pushing into closing. So there you go. Market going down on both occasions. Down, down. So if we're going down all day, you see how the hours are pushing down. Okay, so that's good to see. All right, and on the daily, okay, this is where we are now. If you take a look here after that impulse, it's the same kind of thing with a pennant. All right, so the market is getting squeezed, so we're either going to muck around here sideways, okay, or we're going to like break out or break down. So in any case, if you know the trading days and the hours, which we do, then we can just muck around those edges, okay, and so on. Now, and also be careful for the gap. So no wonder the market pushed it down, and this was a sell zone. If you were a bit more cheeky, okay, you would have taken that and the wick. All right, why? Because that's the body of the candle. Also doable, taps into the body, nice and easy, and then, as you can see, going down at the trading hour, right? At trading hour, at trading hour, at trading hour. Okay, have a good day. Tomorrow, I'll try to do a video tomorrow if I can. Okay, if not, have a good weekend. Any questions, feel free to drop me a line.